and it's the first one for the month. Good morning, good evening, wherever in the world you're watching from. Is Business Morning live on Channels Television. Happy Independence Day to all Nigerians out there. First of all, the global markets are still open right now, even though it's a public holiday right here in Nigeria. Let's look at what's happening with the oil market. Now, we see oil prices jump more than 3% in early Asia trade today as OPEC Plus considers cutting output of up to 1 million barrels per day at the meeting this week to support the market. Brent crude futures rebounded to about $2.82, about 3.3% to $87.96 a barrel in early trade after settling down about 0.6% on Friday. U.S. West Texas Intermediate crude was at $82.09 a barrel, about 3.3% up, following a 2.1% loss in the previous session. Oil prices tumbled for 4 straight months since June as COVID-19 lockdown in the top energy consumer, China, hurt demand while rising interest rates and surging U.S. dollar weighed on global financial markets. Still have eyes on the U.S. dollar at this point to see if the DXY continues to surge. Let's look at what's happening in the grain market. Now we see Ukraine's grain exports fell about 23.6% year-on-year in September to 4.278 million tons, but reached the highest level since the Russian invasion. That's according to the Agriculture Ministry. The country's grain exports have slumped since February. The invasion closed off Ukraine's Black Sea ports, driving up global food prices and prompting fears of food shortages in Africa and the Middle East. The 3 Black Sea ports were unblocked at the end of July under a deal between Moscow and Kyiv, brokered by the United Nations and Turkey. September's exports included 2.08 million tons of corn, 1.7 million tons of wheat, and 432,000 tons of barley. And back here, the Nigerian Exchange Group PLC held its 61st annual general meeting, which is the first since its demutualization and listing on its subsidiary, Nigerian Exchange Limited, last year. At the event held in Lagos, shareholders approved some resolutions by the company's board of directors, which include re-election of the non-executive directors, re-election of the statutory audit committee, and the appointment of Ernst & Young, its external auditor. Do take a listen.
With regards to 2021 performance, we recorded revenue of 6.8 billion naira. That is an increase over the previous year, 2020, of 6 billion. So if you do that math, I think it's about 13%. The profitability increased to about 2.2 billion naira from about 1.9 the previous year. So a little improvement in a very difficult operating environment, given geopolitical tensions around the world and what is happening domestically as well as a result of the ripple effects of those tensions. We also increased the size of our balance sheet to about 37.9 billion naira to continue to give us a strong foundation to execute on our business strategy.
And it's the final Independence Day celebration of the Muhammadu Buhari-led administration. In this report, our business correspondent, Indy John McCoy, explores some trends in major aspects of the economy in the last 7 years. Take a listen.
We have seen in the last few years how huge resources were mismanaged, squandered, and wasted. The new APC government is embarking on a clean-up, introducing prudence and probity in power.
It's the first Independence Day speech of President Muhammadu Buhari, just months after he was sworn into office. Expectation of country's mainstay was on the front burner even at this time. In October of 2015, price of Brent crude was $48.43 a barrel. Domestic production, according to data from the CBN, was 2.21 million barrels a day, while crude exports was 1.76 million barrels a day. These figures seem skewed to the president, which may be the basis for his promise of reform.
Preliminary steps have been taken to sanitize NNPC and improve its operations so that the inefficiency and corruption could be reduced to a minimum.
7 years later, as of June 2022, domestic production stood at 1.16 million barrels a day, while crude export was 0.71 million barrels a day, and price was at about $122 a barrel. Prices stayed above $100 until September, when partial lockdowns in Asia and recession threat pushed prices to about $90. Nigeria has lost its pride of place as Africa's biggest oil producer, overtaken by Angola's average daily output in August of 1.17 million barrels. Nigeria's dwindled to less than 1 million barrels for the month of August, an unwelcome development which has been attributed to oil thefts.
You have the issues of collaboration between even the oil companies and the oil importers. Because one, you can't explain the fact that oil is being exported out of the country. There is naval, there's navy around all the coastal areas. But beyond that, people are exporting this crude. How are they exporting the crude that is not captured in our reports? So you have multiplicity of factors. You first start the issue of the level of poverty in the region. Two, you have to improve the alignment, or you must have a share of the heart of the people in that place.
The country, according to Nigerian National Petroleum Company Limited, loses 470,000 barrels per day of crude oil, amounting to $700 million monthly. Questions on how this is done heightened in August when a super oil tanker without authorization went through Nigerian waters and was arrested in Equatorial Guinea.
From our army to our naval officers, we have some level of information. Even there are some army officers, they pay their superiors to post them to some areas in the Niger Delta. That is clearly what they do. Sir, I think the people that have solution to these issues are not even people sitting down here, sir. It is those that you are going to invite behind the cameras. They are the people that can speak to these issues, because clearly from the naval officers to the army, there is a problem.
The shrinking oil revenue means that the country's foreign reserves has not been getting enough funding. Sadly, the drop is in the midst of surging oil prices driven by Russian invasion in Ukraine.
Your foreign reserves is declining. It means your ability to do business, it's obviously declining. And you cannot, and then it also means that your currency can be weak when you're comparing it to other currencies. The lower foreign reserves you have, the weaker exchange rate, because you don't have the amount of foreign exchange to be able to finance your external operations. So that's the main implication. So, and for an import-dependent country, Nigeria, that's a very grave situation.
The Naira feels the pressure, going from 197 Naira for a dollar in 2015, 360 Naira in 2019, and now about 420 Naira in the official window, and more than 700 Naira in the parallel market, which is more readily available. The situation is compounded with the country's imports rising from $51.92 billion in 2015, $88.74 billion in 2019, $2.71 trillion in 2021, which is 64.11% higher than the value recorded in 2020. The surging costs are captured in inflation data, which hit a 17-year high in August at 20.52. while food inflation stood at 23.12 year-on-year.
If the situation was just about inflation rate of 20.5%, it could have been tolerable. But the reality is much worse than that. In many cases, in many instances, prices have doubled, prices have risen by over 50%, in some cases even 200%. I'm talking of the items that the average Nigerians consume, or items that the businesses also use in the course of production. There is no sufficient attention to the supply side. The only, what can also look like a seeming endeavor on the supply side is this RT200. And again, there's an issue with it. If you say that the exporter should bring exchange rate in, I mean foreign export proceeds in at 427 or 425, You are giving them, is it 200 or whatever per dollar? And they know that if you give them free access to their foreign exchange, they can sell it at 700.
$1 trillion is held by institutional investors.
To deal with this pressure on the naira, the central bank has created various initiatives to boost exports and reduce demand for FX. There's the implementation of 44 items prohibited from foreign exchange for import, RT 200, 100 for 100, among others.
I'm delighted to note that growth has returned to pre-COVID levels due to the accommodative policy support provided by the CBN and our government. Notwithstanding these positive indicators, our economic growth remains fragile, as our unemployment and inflation rate remains at levels that are not very supportive of growth. Second, continued implementation of our intervention efforts would need to be undertaken to sustain the recovery efforts and stimulate further growth of the economy.
Another burning issue is the surging debt, which will only increase with the 11.03 trillion naira deficit in the 2023 budget. Borrowings by the federal government of Nigeria, the 36 state governments and the Federal Capital Territory was at 12.06 trillion naira in 2015. It hit 42.84 trillion naira as of June 30th, 2022.
There's also the ways and means, money government takes directly from the Central Bank of Nigeria, operating of money, which is about 20 trillion as we speak. That one has also violated all the rules and regulations guiding CBN printing money. And so when you are raising loan from the global economy or global financial market and raising from the local market, one is that by government operating so seriously and so deeply in the local market, is displacing so many private sector operators who need these funds. That is one. Two is that because of the condition of our economy and how much our debt is already outstanding, those who are giving us loans abroad, are no longer comfortable giving us.
Surging inflation and threatening debt distress is now common in many countries because of current economic headwinds. Following this, the World Bank has warned of global recession by 2023, following the continuous interest rate hike by central banks to curb inflation. The way of escape will be to boost production and consumption. Economists believe Nigeria can hedge against inflation and avert recession if the suggestion of the World Bank is adopted. But this will be gained by dealing with insecurity in the country. John Mekwa, Channels Television News.
All right, so much to unpack there in that report. And join us now to help us break it down. We have Nnamdi Nwizu, co-managing partner at Commercial Partners, joining us via Zoom. Great to have you on the program, and happy independence.
Same to you. Great to be here. Thank you.
So, looking at the report, not much to rejoice, over in the last 7 years, looking at that report. But I want to get your perspective, Nigeria at 62. How would you describe the economy so far?
Well, I would say it's not been a great story for us so far. If you look at Nigeria as a country, or let's assume Nigeria was a professional or a footballer or something that held so much promise. And all you needed was to have the right people run it, to manage it, to get it on track. But for some reason, you get the wrong mentors, and then, everything gets totally derailed. So not in a pretty picture, looking at all the various indices and metrics that you want to discuss when you're looking at a growing or a developing economy or an emerging market or frontier market, whatever you want to look at or however I want to categorize it. It's not been, even listening to the videos and listening to the various people talk before I came on and basically tell you the story. It's been a sad one and a disappointing one so far.
Yeah, quite interesting. And, from a 1960, perspective, our GDP has jumped about 100-fold from about $4.1 billion then to about $440 billion in 2021. And obviously, we're quite declining, at this point. But how do we get 100-fold again from here?
I mean, first of all, looking at the GDP numbers, if you were to compare with other countries, say countries like maybe Ghana, Egypt, Togo, the growth from 1960 to date looks good. But if you are, first of all, to look at things like the GDP per capita, you would see that we're not doing too well. If you were to look at, say, poverty rates in the 60s, I think it was about 40%. About 15% in the 60s, and now we're well above 40%, which even says to you that despite the over 100-fold growth in GDP, it hasn't translated to the pockets of the common man. If you look at the US, for instance, the US has gone from roughly about 22% poverty rate to say 1% or less than 2% right now. For us to move forward, how do you get a big jump? I think we have to look at certain things. One would be, first of all, how do we get security right? Because you know that security is impacting, the growth of the economy tremendously. You've seen Nigeria trying to grow the world of agriculture, but when you think of the herdsman crisis between, the herdsmen and the farmers, and realize how difficult it is for them to even farm, or you look at power, which is another sector, and look at what the power output has been and keeps dwindling. Some days you have national total blackouts. Look at all those things and you're saying to yourself, okay, how can we get this thing right? I would say pick whoever comes in, for instance, next year, pick 1 or 2 or 3 sectors and decide that these are the sectors that I want to focus on. If you can get power right, get security right over the next 4 to 8 years, then definitely we're on our way to a 100-fold jump again.
And looking at the report there, we saw our import bill sky high there, and Nigeria is quite, an import-dependent nation. Talking about we import almost everything, mostly everything. And how do you think we can actually, make this import substitution a reality? Looking at where we are now, even from what I'm wearing, right now, imported, fabrics imported. How do we make this, I know it's going to be painful, but how do we start this change, really?
Well, I think it's first of all trying to move from a consumption-based economy to more of a production-based economy. So if you want us to start, first of all, no country is an island on its own. No matter what you do, you definitely get to import goods and even services also. But like I mentioned earlier, if you get power right, first of all, that helps you with the production side of things. And for us, it's also about the value add segment or value add sector of the economy. Because, there's one thing, for instance, to talk about agriculture and producing, but the main money, the major spread, the major revenue comes from the value add. So if you're going to look at cocoa processing, for instance, there's a lot more money made when you convert your cocoa to chocolate versus when you just grow cocoa and sell, right? Same thing basically across feed, gold, whatever it is, commodities, it's a value add. So if we can look at how we can transform the economy from just consumption with a high or huge import bill to one where we start to produce a lot more so that we can start to export, then definitely we'll be on track. It's going to be tough, like you mentioned. It means making some hard decisions, but whatever it is, sometimes it's best to go through the hard, take the hard decisions now so that sometimes everybody starts to smile. Right,
and I recently spoke to a tie seller. Most of these are corporate ties, and I asked him, why are your ties so expensive? He said, because he imports the ties. And I asked him, why don't you produce ties? It doesn't look difficult, to make a tie. And he told me that production here cost him more than actually importing the ties. And it actually made me have a rethink there, because we need to solve a lot of infrastructure issues before we can actually start
I agree.
Exporting.
I totally agree. Yeah. So if you can create the enabling environments, bring down your cost of manufacturing, then definitely makes you more competitive. There's no need trying to export if you can't bring down that cost of production, but just will be competitive. when compared to other places. I mean, I'm sure the cost of the Thai in China might be, what, $5? By the time he brings it in here, maybe total spend might be something like $8 or $10, right? But if you have to produce the same Thai in Nigeria, just calculate what the cost of diesel is versus, power supply from PHC, and that's what he had. And you see that making that same Thai here might cost him $20 or so. It becomes difficult for him to compete with people who are importing. And it's not just about banning items, because when you ban those items, what also happens is that the common man on the street has to pay more for the same goods or same service, or pay more for the same time, which leads to inflation. So create a proper, good, enabling environment where cost of power is lower, transportation, which is a big issue, can also be resolved. You can have transport by trains or whatever. I produce goods in the north and I want to sell them in Nigeria. I can put them on the train in Lagos. I can put them on the train and send them down. They get there in a day, right? And cost of transport versus going by road. So those are the things one has to look at and create that enabling environment that would allow us to be competitive when compared to other countries, so that way we can start to produce and export.
Right, so much to unpack there, and an enabling environment is crucial at this point. Mr. Nwizu, we'll continue this conversation after the break. We've been talking to co-managing partner, commercial partners, talking about Mr. Nnamdi Nwizu. We'll continue the conversation right after this break. Stay with us. Welcome back. Still watching Business Morning, and we're still reviewing the Nigerian economy at 62. And we have Mr. Nnamdi Nwizu, co-managing partner, commercial partners, still with us here to continue the conversation. Thank you so much for staying on.
My pleasure.
All right, now let's look at the Naira's relationship now with the US dollar and other foreign currencies. And the relationship has been quite, unpredictable, erratic, and with all of this, it looks like some people are still getting rich, off this dysfunction.
Yeah, I mean, it's a tough one. We continue to see the Naira devalue, even in your analysis earlier on. The videos that we can see where the Naira has gone to from 2015 to date. Even if we were to look at it from the 1960s, early in the years, we had, by independence, we had currency awards in Naira to $1. Now, if you have to look at parallel markets, about 730 Naira, they're about $2, which is really crazy. So I think, basically, we've got the resource costs, where you find one great resource and totally forget about other resources and other avenues for the country to make revenue. And what happens is that when that particular major source of foreign exchange starts to go down, starts to struggle, you realize that you don't have any backup plans. So we've seen crude oil production, which was highlighted earlier, go from about 2.1 million barrels per day to roughly about less than 1 million barrels per day. Look at the figures in August, right? And we've also seen a scenario where a number of countries are moving to clean energy, moving away from crude and coal. So the question is, whether crude is still there for the future. We've seen, countries like the likes of Dubai and Co. also trying to go into tourism, basically trying to create alternative needs. So I think it's something that Nigeria needs to do. To try and start looking at alternate sources of revenue, and which comes back to what we talked about, being a production-based economy and being able to basically export other items beyond crude oil, so that way we can start to get, a lot more dollar revenues, which would naturally improve the so-called Naira relationship with the US dollar.
Right, and looking at the issue of inflation now, there's a global phenomenon, at this point. Now, we've seen the U.S. Fed, rate hike after rate hike. We've seen the dollar actually go on a rampage, compared to other currencies. And here in Nigeria, too, we've been raising rates. And, you know, we had the last jumbo 150 basis point. But we're not seeing, you know, the Naira react to this. And I'm wondering, should we be raising rates at all at this point?
Well, it's a tough one because we all know that inflation is not just about demand. You also have the cost side of it. So, I mean, right now you have, you know, both demand pull and cost push inflation hitting the country. So raising rates basically can help you a bit with the demand side of the inflationary pressure, but doesn't solve your problem from the cost perspective. But however, you can't, once again, like I said earlier, no nation is an island. So you can have a situation where globally, most central banks are raising rates. You know, you've seen that happen with the US Fed, you know, you've seen that happen with Bank of England, EU. You know, you have global rate hikes, and then you can't, as a country, decide that you're going to keep your own rates low, because it does basically creates a huge disincentive for people to come to your country. Because when they get better returns in places like US and, you know, EU and co, then what's incentive to come to Nigeria? Even locally, when people see where your rates are and they see, you know, alternative investment opportunities in the US where you can go and buy, let's say, Euro bonds issued by the same Nigeria trading at about 15%, and you're looking at what local bonds are trading at, and you're saying to yourself, okay, this doesn't make sense because I'd rather convert my Naira to dollars and go and invest over there. So the top one, but one is to help reduce demand. And secondly, it might help people, you know, look at the Naira as a better option to invest in than moving to the US dollar.
And talking about the U.S. again, you know, we've seen, you know, how they've been raising rates, and, you know, the Fed also uses a couple of indicators, you know, to measure how much the rate hike is actually, you know, helping with the fight against inflation. One is the job reports, you know, that they always look forward to. But here in Nigeria, what other indicators are we looking at, you know, to know if, you know, these rate hikes are really working? Is it just that inflation figure, or is it when we see it coming down that we actually know that the rate hikes are actually working?
Well, yes. I mean, if you start to see inflation come down, then you know. If you start to see, for instance, a rise in rates of loan rates, right, to the manufacturing sector and to other corporates, and basically start to see a slowdown from them with regards to issuance of say, commercial papers and co, which basically means that they are borrowing less. Also, as a central bank, they would also check other things like money in the economy, whether I have a growth in savings rates, or is it still, you know, at a particular low level. So you start to look at all those various factors and see, okay, the rate hike, is it encouraging people to save? Do you still have negative real returns? If you have a scenario where your inflation is at 20% and interest rates are 14%, that's a 6% negative real return, right? So we also had the central bank say that as long as rates continue to stay high or continue to rise, then the most probably, that's inflation continues to rise, then they most probably continue to raise rates from their own perspective. So for them, I think a major indicator would be to see a slowdown in the inflation figures, right? And alongside the other metrics I mentioned, and then that will now say to them, or be a pointer for them to stop raising rates or start looking at continuing easing in some form.
Right, it'd be great to see QE at some point again. But now let's look at Nigeria's capital market now. You know, in your view, how has it performed so far in relation to the Nigerian economy?
Well, if you're looking at this year, we've seen a growth still if you're looking at the stock exchange index, right? But we know that the rate hikes have basically taking a toll, and we continue to see sell-off in certain names in the capital markets and co. If you look at, especially like the banking sector, which people believe are going to be squeezed with the rate hikes, with the CRR debits in particular, because increasing CRR means that banks are going to have less Naira to spend. And it also means that even if you move away from the banking sector to other corporates, you're going to see them struggle a bit to raise funds, which basically means increased cost of capital for them and might affect their performance. Some would say to you that this is a bitter pill that we need to swallow to get things under control. But I mean, last year or 2 years ago was a record year for the stock exchange, but we've definitely not seen that happen this year in our capital market.
Right, and talking about the capital market, what do we have to do to get those foreign portfolio investment, the inflows, back, in full force into the market?
Well, from a monetary policy perspective, you would look at higher interest rates, more attractive for them. From fiscal side of things, or from executive government side of things, security is a big thing that needs to be solved, because it's difficult for people to come into your country to come and invest when they keep hearing stories of people getting kidnapped and people getting killed. So if we can solve or improve on our security issue, if we start to increase interest rates, it also make access to foreign currency a lot more flexible or make it easier. So, I mean, go away from the current situation you have, where people come in and have their funds trapped and they can't get out. So the central bank hasn't sold money to FPIs, that's foreign portfolio investors, since June or thereabouts. You see the airlines complain and talk about shutting down because they've not been able to get their dollars out also. So for them, they would also want to see liquidity. They know they can, come in and go out when they want. So I think that's also a key factor for them. But there's only so much that can happen if the economy as a whole doesn't improve. So, for instance, it's difficult for the central bank to say they're going to sell dollars to all foreign portfolio investors when they don't have the dollars to sell. So you need to have production, crude oil production increase or improve. So that goes to, once again, security side of things, and which would help increase our revenues, foreign currency revenues, and also have, like I mentioned earlier, start to get other sources of revenues, so other sources of exports, which will bring in dollars, so that you get to build a healthier balance sheet, a healthier, foreign currency reserves, and that will give a lot more confidence to investors who will then be able to come in. They don't want to have to depend on the CBN to exit when they want to. They want to be able to go to the banks and say, look, I want to buy $2-3 million or $5 million. And they can really get that and exit and take out their capital or repatriate their profit.
Right, quite interesting. And obviously, 2022 has been a tough year for most investors, globally. And I want to know how what are you advising your clients, at this time? Where are those investable spots, that can actually beat inflation, and help you build some wealth?
Honestly, that's the million-dollar question, because a lot of markets have felt the pain, be it Nigerian equities market, be it the US equities market, Eurobonds market, local bonds, we've seen rates rising, so people who invested earlier are basically also struggling. So it's a tough one. There are very few investments today that you would say can outperform inflation, right? Some say agriculture, being able to get into agriculture. Once again, we talked about the security challenges to that. For a lot of investors, we see them moving more into dollar-type investments, because they say, if you have a devaluation of the currency, then what happens with that? Your dollar investment continues to outperform the Naira and continues to outperform your Naira investment. So we've seen a lot more investors moving into dollar-denominated type investments, be Eurobonds, or some just want to stay in dollars, some are going to property abroad. So for a lot of people, it's trying to get some dollar or US foreign currency exposure versus just the local market here.
Right, so much to unpack there, Mr. Nnamdi Nwizu. And at some point, I hope that the next 60 years would be something great for us all in this country. Thank you so much, Mr. Nnamdi Nwizu, co-managing partner at Commercial Partners. It was great having you on the program.
Thanks. It was great being here too. Thank you.
All right, so we've been unpacking the Nigerian economy at 62. And right now we're going to be heading on to the markets, and we have Niete Edet coming on to tell us when the bull will gain independence from the bear.
Good morning, Ladi. Nice welcome back from your vacation.
Thank you so much. Yeah,
I'm sure the rest of my colleagues, you know, they agree with you. So I think it's my turn.
Oh yes, it's your turn.
Exactly.
So
yes.
How's it looking?
Well, for we ended the last week of September. Not too good for the FX market as well as the equities market. Of course, we had that blip of a green for Fridays. I'm sure you took that market.
Right.
But let's take a look at the big picture here. At the markets last week, September the 30th, this is how it turned out at the forex market. Total turnover was down by 17.30%, which is what you can see right there. Across the FX spot market, that was the only segment that had a positive 16.08% increase. But take a look at the forwards, the futures, and the FX derivatives market. They were all in the red. Now, we will be talking to our fixed income dealer at FSDH, you know, to tell us more about that. But over to the other parts of that market, total turnover at the investors and exporters window, it was up by 16.08%. That's where you see it there. As well as the Naira was also, it was down by 0.33%, in contrast to what it traded in the previous week. Previously, it was at 435 Naira, 62 kobo, but as of Friday, September 30th, this is how it turned out at the close of trading. Now, for the market, this is what for the fixed income market, at the Treasury bills market, it traded with bullish sentiments, and of course, that's because market participants, they took position at the short end of the market and at the mid-spectrum to cover for loss at the bid, for bids at the Treasury bills primary market auction carried out by the central bank last week. Across the market segments, the market it contracted by 28 basis points. Now, but I was telling you about that market, the forex market. Let's talk to Taiwo Olajubu, who is a fixed income dealer at FSDH Merchant Bank. Thank you for joining us, Taiwo.
Good morning. Thank you for having me.
Yes, it's a brand new week and a brand new month. Now, that board that you saw there on our board there, the forex market, it shows that transactions was all in the red. Now, can you tell us what happened, why it's on that chart there, all negatives, what was the reason, and then what are we to expect as we enter a new month and a new week?
Okay, thank you very much. So last week, right, the turnover for the FX market was 864 million, coming from about $1 billion from the previous week. And the decline was largely because of a reduction in the FX derivative contracts executed. So last week, speaking to the futures segment, the NDF matured on the 27th, and the maturity was about $201 million. So it could have been assumed that not all the participants rolled over. So that's why we saw a decline in that space. In terms of the forward contracts as well, I'm sure a lot of clients had forward contracts, bilateral forward contracts with some of the market participants, which also matured, you know, last week and wasn't rolled over. So so that's mainly why we could have seen decline across the FX derivative market. So going into the month of October, I mean, market liquidity has been pretty, you know, tight in terms of it not being sufficient enough to meet demand of importers. So what we expect is we expect to see a slight depreciation in the NIFEX rate, as we have seen in the month of September. We also expect that the CBN would continue to conduct the biweekly retail SMIs auction as they have been doing, you know, to sustain the market. We also expect them to, you know, intervene for the invisibles and the SME segment of the market as well. They do that on a weekly basis, and the retail auction is bi-weekly. So that's what we expect. In terms of market liquidity for the INE window, we still expect it to be, you know, about $1 billion, right, week on week, you know, depending on significant market activities, you know, that occur. But in terms of rate, we expect to see a slight depreciation to, you know, 440 levels, because right now the spot rate, the invisibles rate is at 440. The base rate for the retail auction too is at 440. So we expect that there will be a slight depreciation from 437 levels, where it closed the month of September, to about 440 in the month of October.
Okay, thank you for that analysis and for your time. So, Taiwo, that was Taiwo Olajubu, fixed income dealer at FSDH Merchant Bank.
Right.
Well, Ladi, it's still a holiday, so I think I'll give you, some of the markets, review of the markets last week. So we'll continue that on Tuesday.
Exactly, and let's hope for a kind of bullish October.
Oh yeah, first trading day of October. Yeah, well,
maybe
fingers crossed.
Maybe.
But don't count your eggs before they hatch.
Right.
That's my advice.
Thank you, Anita. All right, that was the market update there. Well, we'll go to break now. When we come back, we head to London. That's the moment. Just stay with us. This is Business Morning. Welcome back. Still watching Business Morning live on Channels Television. Let's head on to the UK now. We have Juliana right there standing by. Happy Independence, Juliana. And we see that there's a U-turn there with the expected tax cut. But now it's a massive U-turn we're seeing with that. How's it looking?
Good morning, Laddie. Happy Independence to you and happy Independence to our millions of Nigerians watching across the world. Goodness me, they do say a week is a long time in politics, but the past 10 days have been something that we have never seen before. It has been utterly humiliating for this Conservative government that have been in power for less than a month. But I think the past 12 hours have been incredibly difficult for Liz Truss, the Prime Minister, and of course the embattled Chancellor Kwasi Kwarteng, who has said he is not going to resign despite the mounting backlash. Now, they currently are in Birmingham at their annual conference, and there was growing rebellion amongst pretty senior backbench Conservative MPs, very much not happy with the major turmoil that was caused in the markets because of this mini budget. And so then we got this bombshell tweet at about 7:25 a.m. from the Chancellor Kwasi Kwarteng. I will read just a little bit of it, saying, from supporting British business to lowering the tax burden for the lowest paid, our growth plan sets out a new approach to build a more prosperous economy. However, it is clear that the abolition of the 45p tax rate has become a distraction from our overriding mission to tackle the challenges facing our country. As a result, I'm announcing we are not proceeding with the abolition of the 45p tax rate. We get it, and we have listened. I'm not sure if it was too late to listen, but there was certainly a revolt, and Conservative MPs, including Grant Shapps, the ousted Transport Minister, and Michael Gove, who was kind of a close ally, shall we say, to Boris Johnson, friend and foe, but they said, that they were not going to vote for it. It just didn't make sense to give the wealthiest 1% in the country, so if you're earning over £150,000 a tax cut at a time when we know millions are on the brink at the moment, and it is going to get worse. Liz Truss and the Chancellor doubled down last week, saying it was the best thing, but then, alas, we got this bombshell tweet, and the pound did rise. So certainly things are not well in the Conservative Party quarters. Lots of pressure on Liz Truss. We know that lots of people already handing in their letters of no confidence about her. And now I think there's a lot of finger pointing as to say who done it, because Liz Truss says it was the Chancellor's decision to do it. The Chancellor says it was his right-hand man. So lots of finger pointing and blaming. But I think even those earning that amount know that it was just too much to give them at a time, as I said, when people are struggling to pay their bills.
Quite interesting. I can't believe we're hearing chatter about resignation so soon. Anyway, what other market-moving data are we expecting this week?
Well, as I said, the Conservative Party conference is taking place in Birmingham, so expect a lot of market-moving sound bites over the next few days. But when it comes to the economy, we are going to get the S&P Global Index just looking, a forensic look at the private sector. So that's services, manufacturing and construction. They're all coming in, I think, from today. And that is going to be really important because, of course, this is going to be our first actual look at September's economic activity. We are not in recession recession yet. We managed to scrape ourselves out with the revision of the second quarter numbers, showing that there was actually a 0.2% increase rather than the 0.1% that was previously forecast. But it is getting difficult for people. A lot of people are not having the same amount of money in their back pocket as they were 3, 6, 9, even 12 months ago. So having a look at that data to see if it has fallen below 50, the benchmark will determine whether or not we are going to be heading into a quarter of contraction over the next 3 months.
Right, everyone feeling the bite this time globally. Thank you so much, Juliana. Thank you.
Thank you.
All right, now let's take a look at other markets now. We see that the market, talking about the crypto space there, is still extreme fear. Right now we're seeing the market at 24 points over 100. And we see Bitcoin there still struggling to stay above that 19,000 range. Let's look at the market cap there, $928.11 billion. That's talking about the total, the market cap in the total crypto space this morning. You flip over there, we see the market cap up is down about 1%, and we see volume traded in the total crypto space about $47.15 billion, and we see Bitcoin dominance sitting at 39.71 when we get the market cap slide there. Move over now to the price of Bitcoin there. We see Bitcoin trading at $19,198 this morning. It's up by 0.28%. We're seeing, some kind of buying pressure in the crypto space from Sunday night there. We see that it's up by 0.28%. Volume traded $23.92 billion. Let's flip over to Ethereum there. We see it's $1,291. That's up by 0.29%. Talking about Ethereum there, and the volume traded in Ethereum, $8.65 billion. We'll move over now to the top odds by market cap. We see it's mostly green on that counter, but just eCash there having that pullback down 1.92%. And we see it's all green across board. XRP starting to go up again after they started that run last month. Let's bring in Olumide Additional, now financial market analyst. Hello, Olumide. Happy Independence.
Yeah. Thanks for the compliment, but it's a parabolic market.
Yeah, quite a parabolic market, Olumide. But how did September perform in your view? Talking about Bitcoin price and the overall market, the cryptos in the crypto space.
Yeah, interestingly, despite the fact we saw bearish sentiments across many assets, we saw that the US dollar and Bitcoin really posted gains in Q3, and that is very interesting, despite the fact that Bitcoin didn't do so much in the last month. And pretty much one would say that Bitcoin is maturing. We could see what's happening in the market. Credit suits, credit default swaps going record high on concerns that the bank might be going under. They're also seeing the fact that US stocks and European stocks are also suffering downward pressure. In fact, recent data suggested that more than $60 trillion is already underwater and still might see more sell-off. So crypto market down below the $1 trillion mark seems not to be too bad. But we saw some disturbance over the weekend when some users had issues withdrawing from Coinbase, a leading American crypto exchange. And that really put pressure on Bitcoin and other assets. But, 6 hours later, that was solved. Also, Solana's network outrage for the 10th time also caused some panic in the altcoin market, but that also was resolved. So pretty much we can say that Bitcoin and the crypto market is still on the support level.
Yeah, quite an interesting weekend. But what are you expecting for October? Is it going to be October or October?
Yeah, it's very hard to call, but you don't want to bet against the US dollar and the fact that the US Fed has really highlighted the fact that they're still going to be very aggressive. Also, with reports on what's happening in Russia, Ukraine, and the fact that both parties seem not to be backing down, they're seeing investors really very concerned. And, we are moving towards festive period, so investors are really more particular about spending on core assets, particularly food and energy. So that's really why we're seeing down pressure in risky assets. And it seems likely that Bitcoin might not be able to break above $30,000 this quarter, except we see laxity from regulators and more adoption in unknown markets, particularly in China.
Right, I guess the macro headwinds are still there. Let's see how Bitcoin actually performs this month. Thank you so much, Olumide Additional, financial market analyst.
Thank you.
All right, so flip it over now to the top gainers. We see reserve rights there topping the counter up about 6.35%. So it's quite a lean gainers counter we're seeing there. Single digits gains with MakerDAO, they're up 3.63%. And PancakeSwap, this has been on a run since last month there. Talking about the token for the decentralized exchange. Talk about PancakeSwap, there's $4.60 up 2.12%. We see BNX there up 1.28%. Flip over to the losers counter there. We see Chile's token there. That's the fan tokens. Topping that counter is down about 10.64%. Some traders are looking towards the World Cup to see if this is going to have some kind of rally since it's a fan token platform. We see XRP there down 7.49% in 24 hours, and ApeCoin there down about 5.41%. So it's still quite a bearish market we're seeing for the first trading day this week. Well, that's where the market is looking today for the crypto space and most of the markets. Don't forget to join us at 1:30 p.m. for Business Incorporated for more updates and developments in the world of business. Remember, you can watch this again on our YouTube channel. Just go on YouTube and search for Channels Television, and you can look through our videos collection. Thank you so much for watching. Happy Independence. I'm Ladi Williams. Bye-bye.